Welcome back. In our top business story, DP World's emerging market focus pays off, according to rating agency Moody's. It also said in a study on the port operator that its solid first-half results will underpin its strengthening credit fundamentals. Despite the greater weight of emerging markets, DP World maintains a solid footing in developed markets, which resulted in those positive H1 earnings, Moody's said. They show that DP World has a healthy cash base. Overall, Moody's believes that DP World will remain well-positioned despite the dramas in the European and US economy, as the company's main markets, Asia, South America and the Middle East, are somewhat decoupled from the uncertainties in the developed world. Abu Dhabi-based First Gulf Bank is boosting its presence in fast-growing Asia to tap new sources of income. According to news agency Xavier Dow Jones, the bank plans to set up 4 offices in Southeast Asia to be able to help finance energy and commodities projects in the rapidly growing region. First Gulf Bank is said to be applying for bank licenses in Indonesia, South Korea and in Beijing and Hong Kong in China. Currently, First Gulf Bank runs representative branches in Qatar, India and Singapore. Expanding internationally is part of First Gulf Bank's diversification strategy, the company said on its website. Mubadala Development is set to profit from the initial public offering announced yesterday by private equity company Carlyle Group, of which it owns a 9.4% stake. With the IPO, Mubadala, which is owned by the Abu Dhabi government, could increase its stake to 19.9%, according to press reports. Mubadala, however, didn't want to comment on those reports. According to Reuters, the IPO could be as large as $1 billion. When the IPO will take place wasn't yet announced. The current market volatility makes it unlikely the IPO will happen before mid-2012. Also, experts believe there will be pressure on the IPO price for this deal due to the currently lackluster performance of some listed private equity companies. Speaking of shares, let's now look at the stock indices across the GCC. World business news. In Germany, the nation's top court today ruled in favor of the German government's bailouts for Greece, as well as its contributions to the European Rescue Fund, the EFSF. Quote, in today's judgment, the Federal Constitutional Court has rejected as unfounded 3 constitutional complaints which are directed against German and European legal instruments and other measures in connection with the aid to Greece and with the Euro rescue package. There was a sigh of relief among investors, as the opposite ruling would have posed a large risk on the future of the Eurozone. Germany's lower house is now likely to pass new legislation on September 29th to increase the size and the scope of the EFSF, also including to buy bonds of weak Eurozone members. The enlarged EFSF will nearly double Germany's share of guarantees to up to 211 billion euros, that is 2/3 of the annual federal budget. Switzerland's new currency policy is working. €1 is trading at around 120 against the Swiss franc, just as the Swiss National Bank wants it to. Because yesterday the SNB announced that it would set a minimum exchange rate target of 120 francs to the euro and back it with unlimited amounts of foreign currency purchases. That is the first time ever the country agreed on such a step and shows just how fierce this currency war has become. The exchange rate target became necessary as the highly overvalued Swiss franc, which appreciated off the back of investors fleeing into safe havens, threatened to push Switzerland back into recession. Australia's economy in the second quarter expanded by more than economists had forecast and makes the quarterly growth the fastest in 4 years. Australia's GDP was up 1.2% from the first quarter, when it shrank a revised 0.9% due to the floods, the Bureau of Statistics said this morning. Growth for the year was 1.4% again, well above expectations. Consumers spent big on everything from transport to clothing and food, setting the resource-rich country far apart from most of its developed peers. Also, the Reserve Bank of Australia is quite upbeat about the economy remaining on a growth track. It held its benchmark interest rate at 4.75% yesterday, keeping it the highest in the developed world. Before we go, here's a quick overview of the oil, precious metals and the currency markets. And after that, we have the day's sports news for you.